Happy Sunday, happy Easter, everybody. I hope you're having a good Easter holiday, and I hope you guys are doing great. So, last week we looked at the GBP asset, and I had a successful trading week, and I hope some of you also did from the results I've already seen so far. People seem to. Good evening, Mr. Leo. Uh, and I'm happy that you guys have made profit and you've made money. And one thing I also want to touch on is there's certain group of people that might have been confused or might have got raided in the trade and need further assistance. So that being said, I want to use today's session rather than do the normal analysis. I want to use it to answer questions and point people in the right direction in regards to the technical analysis, where the entry is going to be, where the exit is meant to be, and what they need to do if a trade is going against them. So today, I want to use this moment to answer questions for you initially. And if we have some time left out of the 40 minutes we get from Zoom for free, we can then look at specific assets and analyze further. So based on that, I would like, if you have any questions, can you type them up? Or if you feel you need to unmute yourself, you can unmute yourself and I can go in and explain further. So the, from the from this moment, these are the three things so far that I've already had people message me privately and spoken to me privately about: entry, exits, stop loss, TP. So there are actually four things, people have spoken about. Now, some people want to know where the entry is meant to be, because when I do the analysis, I give you a specific date of entry or a range of date of entry. And people are like, where is my entry going to be? And the next thing is the exit. People want to know where the exit, which they should start taking profit from. And then people want to know where to place the stop loss and the take profit. So if you have, challenges with those, any of those four, I will hope to touch on that today. Now, just a little bit of, clarity before I start this. In order to be super self-sustaining in trading, which is why I've decided to expose my trading strategy and created this, this platform itself, is to help you understand how to trade the market efficiently and sustainably, not to rely on anybody, you know. So if I do the analysis every week and I give you a specific entry, I give you a specific exit, stop loss, and take profit, what happens is I'm not really helping you. That's the truth, it's the bitter truth. Because what I'm doing is I'm fishing for you. And what happens when I stop fishing? You then end up literally not being able to fish yourself. And so people might say, no, it doesn't really work like that. I will still be able to learn. There's no way you can learn apart from being inside of it itself. That being said, what I would like you all to consider is take your trading journey into your hands, because only when you can make money sustainably by yourself can you indeed help yourself and help others around you. Okay. So today we're going to begin with entry. Now, for all members, there's a few things you need to know about entry. You know, your entry doesn't have to be static. It doesn't have to be, oh, I want to go in at this point right here. No, that's not how it works. The market is dynamic and it changes over time. You have to be able to adapt with the changes. Now, I've made it as simple as I can. I think my microphone cut off. Second. Itself, because we didn't just register with the sound so that's hopefully you can still hear me. Let me see. I think it should pick back up now. Let's see. Yeah, it's working back now. So I hope you can still hear me though. I hope you can still hear me. So entry
Yeah, you're clear.
Yeah, thank you. So entry is something you have to look at this way. It's not static, it's dynamic. And that being said, that's why most of you, for example, if you had an entry right here, price tend to move against you, like, but I see a support region right here. Why is price not touching my support? Why did price touch my support and then break it and move away? It's because price is not static. It's dynamic. It changes. If someone announced on the news, for example, like, there's a war going on in Ukraine, or Russia defeats Ukraine, or Ukraine defeats Russia, it's going to reflect on the price. Literally, your support and resistance line will mean nothing at that point anymore. So don't take it personal if price does not go to your entry, or price goes beyond your entry and goes and kick you out in the stop loss. To trade, you have to think more about it in a logical sense, and also add a little bit of emotion to it, just a tiny bit, not too much. Emotions, and the fact that you understand that the market is an emotional game. It's literally taking money from the impatient people to the patient people. That's what it is. It's not about, market going up and down. There's only two directions. It's 50-50. It's either it goes up or it goes down. And the main part that people lose money is in the consolidation, right? It's the bitter truth. Most people lose money in consolidation, and it's because consolidation is designed by its nature to take your money, to literally play with your emotion. And the way to avoid consolidation mainly is to look at things from a higher time frame. If you're looking at stuff from like 5 minutes time frame, for example, this consolidation could literally raid you out. Consolidation here could raid you out. You might be correct in your direction, but that consolidation might kick you out on the market. So always look at your price from a top-down approach. So when it comes to entry, the first point is look from higher time frame, right? That's what you want to do. You want to look from the higher time frame. Now, the people that are members, you have slight edge over everyone else because I've provided you with the tools that you need for your entry. And for people that are not members, this is the first thing you have to look at. That's why I gave you these 3 EMAs right here. I'm going to delete this. I gave you 3 EMAs, which is the 200 EMA on the close, the 50, and the 20, right? Those are the 3 EMAs that I use. And the reason I use this 3 EMA is because price seems to behave much favorable for me anyway, when price is above or price is below it, right? Now, for those guys that want to go in on a trade, if you want to go long on this trade, for example, do not buy until price has successfully crossed above your 200 EMA. Rule number 1, don't buy unless price has crossed over your EMA. All 3 has to be crossed before you decide to buy. And don't sell until price crossed below all 3 EMAs. The prime example is right here. When price crossed below, price went down. When price crossed below right here, price came back, retest, came all the way down, and so on. Look at here, price crossed below this, but 200 is still down here. If you are traded sell there, you got kicked out. The same thing happens here. So it's a filter. So for your entry, you also need a filter. And I use the EMAs as the filter, right? So they're like dynamic support and resistance, right? And number 3, you need an entry indicator. Now, you can use any entry indicator you can find on the stuff. I just personally prefer PZ. Right? I prefer PZ day trading. Now, I use PZ day trading because it's kind of a good filter for me, and I prefer it, in contrast to other ones that I use, for example. So an example is if I know my seasonality, for example, entry indicator. And your entry indicator also consists of your seasonality, probability, and COT, and also your William. Now, this might look like a lot. What the heck is this? But for people that have never been before, you're going to see these tools in a moment. And then you need that entry indicator. You can use your PZ for it. So if I know, for example, that I'm meant to go short on this day. Now, ignore the fact that I'm using a daily time frame. Let's just say this is whatever time frame that you're looking at from the market. If I know I'm meant to go short on this day, and which is sell, if I'm meant to sell on this day, and seasonality, probability, COT, and William has confirmed that for me, all I need to do is wait for price to go below the EMA, and I get my entry indicator here, and I sell. And guess what my stop loss is going to be? That's where you use your ATR. ATR gives you your stop loss. Literally. ATR. That's where your stop loss is. And your TP is also your ATR. Plus these right here, seasonality and probability. Right? So far, I've covered entry, I've covered SL, I've covered TP. Literally, even TP is the same as your exit, literally. So I don't need to cover exit. So basically, your ATR gives you where your stop loss is going to be and your TP is going to be. If you're using this, for example, you can ideally just put your stop loss behind here. Easy for you, whoever's using this. Put it here. You don't need to do your ATR value. But if you have ATR, for example, it's telling you right here, because I'm on a daily time frame and because of the asset I'm looking at, NASDAQ, it's telling me it's 350 pips. So what it's telling me, my stop loss should be at least 350 pips. But with this asset, for example, or with any assets, I always do ATR times 1.5. Or if you want to be safe, ATR times 2. Now, ATR is the average true range. And let me explain it for you. I'm just going to quickly delete all of this plain chart. So with ATR, it's the average true range. Now, for mathematical people or people that are not so good with mathematics, it doesn't matter. ATR is the average true range in 14 days. So it's going to accumulate this candle, this candle, this candle, and all the candle up onto 14 candles ago and calculate the average price movement. What is the average of the price movement? Now, if I know price has been moving an average of 350 pips, for example, in the past 14 days, what is the likelihood that price is going to move beyond that 350 pips today? The chances are lower. It has a lower chance of moving beyond that point today, right? So that's why I use ATR. And that's because if I got my entry from here, for example, and this tells me that the ATR is 350 pips, if I put that times 2 or times 1.5, I give the market so much space that it won't be able to raid me out of the market because of the average of the price in 14 days is not just going to change all of a sudden unless there's a very big news coming in. That's why we use the ATR, to avoid you getting raided. A lot of people will enter the market, you get raided easily, and then price started moving in your direction. It's because you're not factoring in the average price movement over the past few days. Because once you know that information, if I know from here, for example, price moved 350 pips, in whatever direction, if I put my stop loss at 350 pips, let's say that's right here, for example, price won't raid me. Even if it comes down against me, the likelihood of price raiding me is lower. And that gives me the chance to literally ride the market. Okay. So far, have I confused anybody? I've given you the entry, I've given you your SL value, and also for the take profit, and let me even move that also here. Actually, this is for here. Your take profit is the first ATR value. I encourage people to have, 3 TP if you can. TP1 is your ATR value. TP2 would be your ATR times 2 or ATR times 1.5, whichever you choose, times 1.5. And TP3 will be let it float. Just let it go. Just make sure that once price hits your wait, how you spell float again? I don't know. Flip it. You get the gist anyway. I forgot it how to spell. If you get your first ATR value, your first profit, right? So let's say my take profit I'm selling, my TP1 is the ATR value is here. Once price hit my first take profit, all my stop loss comes to break even if this was my entry. So if my stop loss was at 350 pips before, it goes all the way here. So that way, once I've taken first profit off the table, even if price goes all the way back against me, I just get kicked out and I don't lose any amount of money. That's how you do your take profit. And if you consistently go like that, thank you very much for the correction, Mr. Oza. I'm grateful. So correcting me on spade and float. So if price literally goes all the way back here, it kicks you out in break even or maybe a little bit of profit, but at least you've taken some profit off the table. Then you can factor in, okay, you want to re-enter the market. So that's why sometimes when you see my trade and it's like, oh, I got a wide stop loss, it's not because of that. It's because of I'm looking at the ATR value, right? If price doesn't get to my ATR value, this robot right here would not kick in. And I gave you guys a copy of the robot anyway. So this is my one. Mine is a little bit more sophisticated than yours, but this is ideally my one. So my SL, which is right here, would not kick in unless that is it. And I can hide my stop loss or I can let it be placed on the chart. I mostly hide mine anyway. So the robot will not kick me out of the trade so far my ATR value is not met. Once my ATR value is met, though, it kicks me out of the trade. If it's in loss, it kicks me out. If it's in profit, it takes the profit and readjust the trade for me. So that's what it is, guys. It's not rocket science. I'm not doing magic. I'm not trying to, show you guys something that, it's not possible for you to trade. I'm giving you exactly what I do. I've literally laid out my entire strategy that I've worked so hard for you. So I really want to help you to make sure that you make some money for yourself and your family. So that's that. Does anyone have any questions in regards to entry, stop loss, and take profit?
Yes, good evening, Mr. Dej.
Yes, good evening.
My question is on the entry. You made mention of the ATR value.
Yes.
What I want to understand about the ATR value is this. Now, ATR value, are we going to calculate it from our entry? Maybe, like, let me take, for instance, the way I understand it. Now, assuming that I'm taking my entry on 15 minutes,
yes.
Assuming the ATR value is giving me like 20 pips.
Mm-hmm.
If I should multiply it by 2, the normal stop loss should be 40 pips.
Yes.
Now, in terms of take profit, then how am I going to go about that one based on the ATR value?
So the ATR value, you don't want to look at the ATR value from 15 minutes, actually. Try to look at it from 4 hours, 4 hours and above. So
I just used it as an instance.
Yeah, because of you said that actually made me mention this point as well. So a lot of people know. So it's good that you mentioned that so people can know about it. Now, with your take profit, if the ATR gives you, let's say 20 pips, as you said, right? Your first take profit would be 20 pips. So it's 1-to-1 ratio. So what you do here, it's not 1-to-1, but slightly less than 1-to-1. But you want to place it ideally at 1-to-1 ratio. So whatever the ATR tells you, that will be where your first take profit is. Now, your second take profit could be the exact 1-to-1 with your SL, which is if you did ATR times 1.5 or ATR times 2. If you did ATR times 2, for example, let's say 40 pips. So your second take profit will be 40 pips. So while your first take profit would have been 20 pips. So if price ends up going away and touching your first ATR value, which is 20 pips, you move all your stop loss for the other multiple trades that you have into break even. So if they're all at break even at here, for example, you wouldn't lose. Automatically, you've profited 20 pips. Yes, Mr. Leo, the best time frame is 4 hours. 4 hours and above is fine. So automatically, you will not lose that trade. You get what I'm saying? And also, because you use the ATR value, your trade is not choked. So you're not choking your trade. So that way you don't get rated and then price moves in your direction. And you're like, damn, man, I was actually in this trade, but it's rated me out. My stop loss was too small. Because let me be honest with you guys, not every single time you take a trade, it's going to go into profit immediately. That's what separates the guys, you know, that make money and the guys that don't. The guys that don't make money at once, like, oh, the moment I go into the trade, boom, it's going into profit for me. It doesn't happen like that. Sometimes you go into profit, sometimes it comes away, and sometimes it go back in. You have to be comfortable with your strategy that, look, even if price moves away from my entry zone and moves in negative, I'm confident that because I set a good stop loss, price will not raid me out. And if price raids me out and kicks me out of the trade, then it's most likely that trade is going the opposite direction anyway. Do you understand, sir? Or should I re-explain?
Yes, I'm cleared. I'm cleared. I'm cleared.
Okay. And your top take profit, if you have a 3 position, just let it flow. Just let it keep going. Just let it flow, you know, till whenever your seasonality and probability tell you to come out of it. So worst case scenario, you get kicked out. But once you've hit your second TP anyway, you know, your new ATR, your new stop loss will be at your first TP value. So let's say once your second TP is hit, let's say your TP1 is, you know, TP1 is here. Once that's hit, your stop loss comes here. Once TP2 is hit, your stop loss comes here. So now you've made money on 2 trades and you have your third one automatically in profit. So just let this keep riding. Just let it keep going as much as it can. And you can trail it if you want. You can trail the stop, or you can just leave your stop loss static right there and exit whenever the seasonality and probability tell you to. Or you just get rated out, and either ways you still made money. You made 2 profits plus half a profit. You know, so that way you're much safer in the market than having, you know, okay, I want to have for this trade, for example, I just want to have 20 pip stop loss. If you have 20 pip stop loss and your ATR value for that week, for example, is at 40 pips, the likelihood of you getting rated is literally super high, about 200%. So those are the things you have to be careful about when you're trading. Is there any questions in regards to ATR or anything in regards to entry, stop loss and TP? Please, if you have questions, this is the best time to ask this question, because the likelihood of me answering those questions again is very slim. Okay.
Okay, sorry.
Yes.
Good evening.
Good evening.
Boss. Okay, so for the ATR,
Yes.
sorry, I came in a bit late. So the ATR actually shows you what the market has been doing for the last 2 weeks, if I'm correct.
Yes, depending on, you can set it whatever you want. So in my scenario, for example, if I go to let me see, my ATR, I just go with the default, which is 14 days, but you can set it to the past 20 days, the past 23 days, the past 50 days. You know, based on what you set, the value will change. Look, so past 50 days, you know, value change. I just use 14 days because that's more recent and is the default.
Okay. So you can actually use 14 days, 21 days, 50 days, 200 days, depending on
whatever you feel to use, to be quite frank. You can use. I just use the past 14 days because it shows, okay, in the past 14 days, this is how prices moved in 14 days. So me expecting price to move beyond what is done in the past 14 days is very, very slim. I mean, if you look at the candles in the past 14 days, you will see the average look kind of similar. The way they move is similar here, similar here. When it's consolidation and consolidations happening, it's similar. You can find 2 or 3 candles almost the same length. You know, but if I'm looking at from here to here, for example, you can see here that you have smaller candle size, you have bigger candle size here. So things like that you have to always consider. So I just choose to use the default, which is past 14 days.
Okay, so how do I get this ATR use? Is it in
Every platform has it. Every platform, TradingView, MT4, C Trader, whichever one you're using, Think or Swim, you can get it there. It's default. It comes with it. Just indicator, ATR, average true rate.
okay.
Yeah.
Thank you very much.
You're welcome. So I'm guessing, does anyone have any more questions? Is there
Yes,
any?
so,
Yeah.
It still regards the idea. Now, you made mention of the period. Setting the period, is it advisable to set it alongside with the number of period we have in our moving average? Like, let me take for instance, our moving average, you have 20, you have 50, you have 200. Is it advisable to pick, maybe we can pick 20 and use 20 so that it can also align with the moving average? Does it make any sense?
It's very brilliant. What you said right there is brilliant. You can do that. You have to figure out which one works best for you. If you like to invest in 20, choose 20. If you like it better on 14, use 14. If you like it better on 50, you can use that. But if you're going beyond 100, it won't be as accurate.
Hello, boss. We can't hear you at all. We can't hear you.
Okay. Can you hear me now? Can you hear me now?
Yes.
So I apologize.
Yes.
So what I was saying is it's your choice, to be honest. If you want to use it on 20, it's a brilliant option to use it with 20. If you want to use it with 50, you can use it with 50. Once you go beyond 100, it becomes less accurate, because when you look at the past 100 candles, for example, you can see you have smaller size candles all the way right here. You have smaller size candles here, while you have bigger size candles right here. So you want to use it, the closer it is to the time frame or the time you're trading, the better it is. The more wider it is from when you're trading, the less accurate it becomes. So you want to keep it as close as possible. So what I recommend is you play with it, you see how price has been moving over time, and you test it out. I mean, what you can do is you can do a test, for example, if you can do a back test. I don't know if you guys know that there's a function in this place that you can do a back test, and you can test strategies right here. You can load the ATR in it, for example, and test the strategy and see how it works best for you, maybe in the past 14 days or past 20 days, whichever that you feel is best, basically. But I just use the default. I just use 14. I just couldn't be bothered to do more tests on it.
Sorry, can you teach me how to set up the ATR? I'm trying to use it now, but my screen, what is bringing is actually the graph on that.
Yeah. It comes with a graph. It does come with a graph. If you go insert indicators, average true range, you see what I did with my graph right here? I just put none. If I selected my graph, for example, and make it that, you would see my ATR looking like that.
Okay.
So I don't need all of these cycles. It doesn't really, do much for me. So what I done instead is I've taken out that for distraction purposes, and I can easily just minimize it like that and just see the figure right there. That's all I needed. I don't need the graph,
Okay, so the figure.
That's all you need, bro. Just the figure. So it's mathematical calculations, literally. That's all you need. It's just the numbers you need. You don't need.
How do I use this figure? How do I use this figure to calculate? Because I'm sorry, maybe I'm taking you back a bit. I was thinking the Zoom class was going to start by 6:30. I didn't know it was going to start there.
Always 6 o'clock.
So I don't know, how do you calculate this ATR?
It's literally you use ATR times 1.5 or ATR times 2, whichever you feel like. You might have to watch the webinar again because we have short time left. And basically, you can use the ATR times 1.5 or ATR times 2. And
okay, I'll watch the webinar again. I'll watch the webinar. So
that will give you a figure, of what to use it on. All right. Does anyone have any further questions in regard to entry, stop loss, take profit? No? Okay. If that's the case, I see Cotland, you want me to check gold. Okay, so what we're going to do is, the beauty of the strategy is, even with the 8 minutes we have left, I can quickly run an analysis of gold very quick. So the first thing we do, as as we always do, is check the COT report, then check, seasonality, see if it aligns, and then check probability.
Your mic is cut out.
Can you hear me now? What about now? It keeps switching between SoundCloud and the laptop microphone, so that's the issue. Can you hear me now?
Hello. Can you?
Now we can hear you.
Apologies, it's switching between my laptop microphone and my sound card, so it's switching between two at the same time. That's why it's cut it. Yeah, so the first thing we can see is gold. They had in 10,000 new positions to the short section, and the non-commercials, they add in 13,000 to the long. So that creates liquidity for us. But what we want to focus on is the changes of the commercials. So we have 10,000 new positions going short. Now, if we check the seasonality of gold, I'm going to rush through this very quickly. I think we can actually do more analysis than just gold. Well, let me just rush. If you have any other assets you want me to look at, just quickly post it. I'll try to squeeze the time into it. So gold right now, we in April, so April 17th. So what we can see right here is gold doesn't really give us the alignment that we want. It's showing me they're going short, but looking at this, I don't really see that short coming because of seasonality doesn't really align with that. I mean, this is where we are right now. No, so with gold, I wouldn't really touch it right now. I mean, until the move starts, then if I see it's following maybe the 5 years, for example, then I can start trading gold. If not, I would just let gold be for now in regards to that. So, wow, this is a lot of asset. I don't think I cover everything. So the next thing on the list is GBP Jpy. So let's go GBP ASAP. Let me see. So GBP, next thing to see is GBP, and then I'll just check JPY, seasonality and probability. So GBP, they adding 10,000 new positions going long. Let's see GBP. We might actually have to keep the positions for GBP for last week if you still have bit positions left in there. So they're going long on GBP. JPY, I don't know what they're doing on JPY. It's not loading. And let's see GBP. We have currently we're here 17th. So with the GBP, it's looking like long, but we might have a pullback on the 18th, which is tomorrow. And best time on entry will be 21st on GBP. Since we have them already going long on GBP and 21st, we have that going in. So the last thing for me to check would be probability of GBP Jpy. I don't really need to check the JPY move, to be quite frank, because GBP is already giving me more than enough momentum. But I mean, you can see JPY2 is adding positions there. But GBP Jpy, let's see what we have. Right, GBP Jpy. So the date would be 18, so 18. So with GBP Jpy, our best option would be when again? 21st. 21st is when? I think it should be Thursday. So GBP Jpy 21st, Thursday. We don't have a good chance here, but it's telling me, probability is telling me we have a good chance all through the week. Now, because the alignment isn't really clear, I wouldn't want to touch GBP Jpy till Friday. So Friday would be my entry for GBP Jpy. So Friday long. That's your lowest risk you're gonna get. Lowest risk is Friday. So you can go in on Monday if you want, but I wouldn't risk it because you might get that pullback coming in play right here. Maybe price might consolidate for a little bit, but 21st seems to be a good option. So you can either go in on 21st or 22nd, but I would choose 22nd. 22nd on GBP Jpy long for, and you can go long all the way till around 29th. Okay, 29th. Let me see which other assets we have. So guys looking at me like, this guy, you might be crazy. Like, you just putting out his assets. You can, I don't have time to do the technicals with you. I've already showed you what you need to do in technicals. So on the entry, take profit and stop loss. So you can figure that out. USD JPY. JPY we already know it's going long. Let me quickly check USD for a second. Okay. USD is going short. That might be a very good one for us, but let me check JPY seasonality. If JPY seasonality is pointing long, this might be the last asset I can check. I can only check those two for you. Well, you guys can always check this by yourselves. People that have membership access can always check this and figure out the trade they'll take. 17. So JPY is actually looking like short on the 18th. So JPY 18 to 21st. Oh, actually, you know what? Just by seeing that Gdp Jpy as well, you can actually risk it. It's still high risk. High risk. Now, you know what? Let me not do this to you guys because some of you might not be able to hack it. But stick with that that we have. So USD JPY wouldn't be able to go because JPY is pointing long, but the seasonality of JPY is pointing short. Right? Seasonality of JPY is pointing all the way short, so we can't really take that. Yeah, so yeah, market consolidation money. So we can't really take that. So far we have the GBP and JPY. We've got 2 minutes left. Let me see if I can find a second trade. Yes, the JPY, GBP USD. Let's check GBP USD. So if we check the probability of GBP USD, because we know USD is already going short. Yeah, might stick to GBP pair. I'll find GBP. Where's GBP USD? We got 1 minute left. It's like extreme sport. All right, GBP USD. It's telling me I should go in on the 18th. Now we know GBP isn't looking good on the 18th, so I'm not gonna really mess with it. But on the 25th will be your best option to go into GBP USD 25th. So 25th. And exit will be 29th anyway. So next week for GBP USD is looking good. And GBP AUD. If we have, I think we have a few seconds left. My GBP AUD. Yes, then let me come on. I know I always play this extreme sport with myself. All right. So GBP AUD, same goes 22nd. So that's it. So that's all we have today, guys. That's all I have for you guys today. I hope you had a eventful webinar and you understand a little bit more. So I'll catch you guys in the chat room. If you have any questions, just let me know there, and you can join the membership from the website. Take care of yourself, guys, and have a lovely trading week. Yeah, 22nd, right? Thank you. So take care of yourself, guys. Have a lovely Easter. Bye.
Happy Easter, Dan. Take care of yourself.
Thank you. Bye. Take care.